People, I welcome you back to Caroline's Online Academy. In this series of videos, we're learning the various concepts involved in accounting for share capital. In the previous video, I taught you what was pro rata allotment, taught you the meaning of pro rata allotment and how to compute the number of shares allotted to a particular shareholder from the number of applications made by him, and vice versa when the shares are allotted on pro rata basis. Now, in this video, I'm going to teach you how to account for pro rata. Account for share capital, issue of shares when pro rata allotment is made. That is, we're going to pass the journal entries for the various transactions. We're going to understand how it is affecting the journal entries that we had learned till now. Understood? So I have a question for you here. Swati Limited issued 1 lakh shares of rupees 100 each, payable as follows. Application is 25, allotment is 30, first call is 30. And the second call is remaining. As the issue price is 100, you deduct application money, allotment money, and first call money, you'll get the second call money. 100 minus 25 minus 30 minus 30 will give you 15 rupees. So that is 100 minus 85. The company received 1,40,000 applications and it made pro rata allotment to all applicants. Past necessary journal entries. Look how the question has been worded. The company has received 1,40,000 applications, which means it's a case of oversubscription. Whenever the company has faces oversubscription, it can do various things. It can reject the excess application and allot the number of shares that it had promised to allot only to certain applicants, or it can make pro rata allotment. In this case, the company has made pro rata allotment, which means what? Nobody's applications have been completely rejected. Everyone who has applied for has got some shares against their applications. Understood? Let's see how to go ahead and account for it. So we write in the books of Swati Limited, journal, which is important. The format is important, my dear children, from CBSE point of view. And then we pass the first journal entry. What is the first journal entry? It is first transaction, it is receiving application money. And the journal entry for receiving application money is bank account debit to share application account. Share application account. Application money received. And how much would be that, my dear children? It is the total number of applications received by the company multiplied by the application money per share, and it happens to be 1,40,040 and 25 in this question. So it is 1,40,040 into 25, which is 35 lakhs. The second journal entry is allotting shares, my dear children. It's very important that you get this right in questions, in pro rata allotment questions. Before we go to the second journal entry, I would like to explain you something. As I told you, every applicant has got some shares. Am I right or not, my dear children? So every applicant has become a shareholder. Whenever pro rata allotment happens, on the share on applications on which pro rata allotment has been made, every applicant of those applications gets some shares. Am I right or not, my dear children? So what happens is we receive 1,40,000 applications and 1 lakh shares have been allotted. So if you subtract the 1 lakh shares, you find that 40,000 applications has been received in advance. But these 40,000 applications belong to the shareholders who have been allotted 1 lakh shares, because we made pro rata allotment. So for every applicant, a certain portion of share capital has been allotted. Understood or not, my dear children? Which means the 40,000 extra application has been made by the existing shareholders only. And each of them have paid 25 rupees per application. And right, along with every application, 25 rupees has been paid. So on 40,000, you would have received 100 followed by 4 zeros, 1, 2, 3, 4, which means you would have received 10 lakh rupees in advance and 10 lakh rupees in excess. Now, the company can do various different things with the 10 lakh rupees that has been received in advance. It can refund the 10 lakh rupees to the shareholders and tell them to pay the allotment money after that. Or the company might tell that, I'm not going to refund the 10 lakh rupees to you. You can, I'm going to set off this 10 lakh rupees against the allotment money which is due from you now that I have allotted shares. Because the next transaction is actually transferring the application money to share capital and making the allotment money due. And when you make the allotment money due, the shareholders, the 1 lakh people who are holding those, have received 1 lakh rupees from those people itself already. We have received 1 lakh rupees from those people. So, it doesn't make sense to actually return this 1 lakh and then get the allotment money from them. Instead, what we can do is we can adjust this 1 lakh against the allotment money due from them. There are certain rules with respect to how you're supposed to read the question and how you're supposed to deal with excess application money. For now, I will just tell you that unless and otherwise the question says that the excess application money has been refunded to the applicants, you're supposed to assume that the excess application money has been adjusted towards the further calls, like allotment, allotment. All right, so let's go ahead and pass the second journal entry with that knowledge that we just gained. In the second journal entry, we would be transferring the application money to share capital. It's as usual, you debit share application account with the entire amount received. But can you transfer the entire 35 lakhs to share capital account? No, you cannot, because application money receivable per share was only 25 rupees. Am I right, my dear children? And we have only allotted 1 lakh shares. So we can only transfer 1 lakh into 25 lakh rupees to the share capital account. And why are we only transferring 1 lakh into 25 to share capital account? It's because we have only allotted 1 lakh shares. And for each application or each share allotted, we are only eligible to receive 25 rupees per share as application money. So the application money that the company is eligible to receive from the shareholders is only 1 lakh into 25 lakhs. We have received 35 lakhs because of the extra application that have been made, and that will do. I'll tell you what we're going to do with the excess 10 lakh. So we'll only transfer to share capital the total number of shares allotted multiplied by the application money receivable per share. The remaining 10 lakh rupees, unless and otherwise the question wants you to refund it. If the question wants you to refund the remaining 10 lakh, the excess application money, you will credit bank account. But if the question does not tell you that you got a refund, what you do is you take it to share allotment account. You credit share allotment account with that amount. That is because you're going to be setting off this extra 10 lakh that you have against the allotment money that you're going to make due from the same shareholders who paid this extra 10 lakhs. Understood or not, my dear children? So you take it to share allotment account. I hope you're getting it, my dear children. See, we have some people have applied for 1 lakh 40, made 1 lakh 40,000 applications, applied for 1 lakh 40,000 shares, but we do not have 1 lakh share, 1 lakh 40,000 shares. We only have 1 lakh shares. So what we did was we made pro rata allotment to all the applicants. That is, in the proportion in which they all made applications, we allotted some shares to everyone. We did not give full shares to anyone, or we did not reject anyone's application outright. So everyone who has applied for shares has got some shares. So these shareholders who had applied, for instance, if A had applied for 80,000 shares, he would have got a certain number of shares which would have been less than 80,000. So he would have had made some extra applications, right? On that also he would have paid certain money. Am I right or not, my dear children? So that extra money, instead of refunding to A, because I have not allotted shares to him, I am supposed to refund the extra application money. I'm supposed to refund the money on the rejected applications to him. But instead of refunding it to him, as he's actually a shareholder, as he's someone who's continuing as a shareholder in my company, what I'm doing it, I'm keeping that excess application money aside and I'm telling him that I'm going to set it off against allotment money that I'll be making due in that very instance. The moment I allot shares, I transfer application money to share capital and I make allotment money due. I tell him to pay the allotment money. Am I right or not? So I'm keeping it aside for setting off against share allotment. Now, if it was not pro rata allotment, if it was a normal oversubscription problem, what would we do? We have received 1,40,000 applications. We'll reject the 40,000 applications outright. We'll reject 40,000 applications of some person. Now, when we have rejected outright, what are we supposed to do? We cannot. Those people don't have any relationship with us anymore, right? They are not going to continue as shareholders with us anymore. We have rejected their application. So what will we do? We'll refund the money back to them and send them off, because we can't make allotment due on people who are not shareholders anymore in the company, right? So what we do is when we reject the shares, we refund the application money as they are not going to continue as shareholders anymore. But when I'm making pro rata allotment, I have allotted some shares to everyone. Am I right? So every one of those applicants are going to continue as shareholders in my company, which means that whatever extra money that they've given me, I can refund it to them and then make the allotment money due, or I can tell those people that I'm going to make the allotment money due, and whatever extra money you have paid me along with the application, I'll set it off against the allotment dues. That is what I'm going to do now. And that is what I have done. So out of the 35 lakhs received by me on the 1,40,000 applications, I can only take 25 lakhs to share capital because I've only allotted 1 lakh shares. And on 1 lakh shares, application money is 25 rupees per share. So 1 lakh and 25 is 25 lakh. The remaining amount that I have received on the 40,000 extra application, which is 10 lakh rupees, belongs to the same shareholders to whom I'm going to make the allotment money due. As I made pro rata allotment without rejecting any applications. Understood or not, my dear children? So that amount I'm going to use to set off against allotment dues, and therefore I'm crediting share allotment account here. Shares allotted. And now the third journal entry would be to make allotment money due. Irrespective of how much excess application money I have, I'll make the share allotment money due for all the shares. So that will be share allotment account to share capital account. Share allotment money made due. Allotment money was 30 rupees per share, my dear children. So on 1 lakh shares, I'm making 30 lakh due. And the next thing to do would be to receive allotment money. I made 30 lakhs due, but do you think the shareholders will pay me 30 lakhs? They will tell me that, I made some extra applications and I have paid some 10 lakh rupees extra along with the extra applications. So now I'm not going to pay 30 lakhs. I'm only going to pay 20 lakhs. You may use of the 10 lakhs. That is what the shareholders are going to tell. They're not going to pay the entire 30 lakhs. Am I right or not, my dear children? So what would they pay? They would pay whatever is due minus the excess application money that is already there with the company. Understood or not, my dear children? So this journal entry will be passed for with no change in the journal entry as such. The amount would be the total amount made due minus whatever excess application money that is already available with the company. In this case, it is 10 lakh. We've already credited share allotment with it, and so we're crediting, when we're receiving, we will only be receiving 20 lakh rupees because they've already paid 10 lakh rupees, the same shareholders who made those extra applications. Understood or not, my dear children? So if you see share allotment has got debited for 30 lakhs here, and it is getting credited for 30 lakhs. And that way it tallies. Understood or not, my dear children? Now the next thing to do would be to make share first call due. Now, in this case, the excess application money was not even enough to cover the allotment money due. The excess application money was only 10 lakh and the allotment money due was 30 lakh, which means the excess application money was not sufficient even to cover the allotment money. And therefore, there is there is no excess application money available to be set off against a few further calls. So we'll make the further calls due for the full amount and receive the full amount. So the journal entry will be share first call account debit to share capital account. Share first call made due, and the amount would be, my dear children, it will be 1 lakh into 30. And second journal entry would be, the next journal entry would be to receive first call money, as we don't have any excess application money against first call, as we've already used all the excess application money against allotment. We'll be receiving the entire 30 lakhs from the shareholders for first call to share capital account, and that will be the entire amount that we made due, as there is no calls in arrears or calls in advance. Share first call money received. All right. So the next thing to do would be to make share second call due. The journal entry would be to share second call account debit to share capital account, share second call made due. As we know, share second call amount is 15 rupees per share. We calculated, and that will be 1 lakh into 15 lakhs. And this will be share second call. Oh, I made an error here. It's not share capital account, it's share first call account. When you receive the money, the call account will be credited, right? Share second call. All right. So with that, we have come to the end of this. This is the most basic pro rata question, which definitely will not be asked in the exam, as there are, the 6 mark question that they ask involves a lot more complications than this. Not a lot. Actually, it is a combination of whatever we have studied till now. There may be calls in arrears, there will be calls in advance, there will be premium and all that. but we just have to incorporate those things into this basic pro rata allotment problem, and then we should be good to go. The only thing that we have to understand that in the second entry, if there is excess application money, if there was an oversubscription with rejection, we would have credited bank account and returned the 10 lakh rupees. But if it is a pro rata allotment, we don't refund that money unless and otherwise the question says us to refund the money. What we do is we take it to share allotment account and set it off against the excess application. Understood or not, my dear children? With that, we've come to the end of this video and this problem. I hope you understood this. In case you have any doubts, please do let me know in the comment section. I'll be more than happy to help. Please do like, share, and subscribe to the channel, and leave your comment in case you feel like saying anything to me. I'll be more than grateful and highly motivated if you interact with me. Thank you so much. We will have fun. Bye bye.